What's up, stock compounders? Brad here. So today I want to talk about Ray Dalio, okay, the market wizard behind the world's largest hedge fund, Bridgewater Associates. Now, Dalio, he is a student of markets, markets through time, markets in many different geographies. He's studied crashes, and he's got some very interesting thoughts about what is happening today in the U.S. regarding inflation, something he's very concerned about. He's been quoted saying cash is trash. He's concerned about kind of the levels of the U.S. stock market, wants to be prepared for anything to happen there. And then also the U.S. dollar as the world's global reserve currency. He is concerned that that is in jeopardy, okay? He sees the U.S. at the end of the long-term debt cycle. So, Dalio is a mastermind when it comes to investing. And the beautiful thing is we get to see a chunk of Ray Dalio's portfolio every quarter through his 13F filings, okay? So that's what we're going to do today. We're going to take a look at his top 10 holdings that have been reported in Q4 2020 through those 13F filings. So, just to show you guys where I'm getting the information from, you go to sec.gov, you search Bridgewater Associates, you can look at the 13F filings. Now, there are a lot of entries in this latest 13F filing. There are over 500, I think 524 different holdings for Bridgewater Associates. So what I did was I copied this for Q4 and I copied it. So right here is Q4, okay? So I copied all of it. Then I copied it for Q3 and I put it into a nice little table here, okay? Just the top 10 holdings as of Q4. Because there are a number of things I want to see here. One of them is allocation. How much do these positions make up as compared to kind of the total equity position that's revealed by these 13F filings? And then also the total assets under management, right? So Ray Dalio's Bridgewater Associates doesn't have to reveal everything they own every quarter. They just have to reveal their U.S. equities, their U.S. securities. So that's what we're going to look at. You can see here total assets under management, 138 billion. We're only looking at the top 10 positions within an 11 billion chunk of that. So less than 10% of the whole pie of Bridgewater Associates. So keep that in mind. So I want to look at the allocation. I also want to know what are the changes from the third quarter, right? From the end of the third quarter, when we get to see a snapshot of these positions, to the end of the fourth quarter, when we get to see that next snapshot. So we can see the change in shares from the third quarter to the fourth quarter of 2020. And that's this column, the change in shares. Now this is today's price as of March 4th, okay? And I used that to come up with a current value, right? Because I wanted to do a little bit better than the value at the end of the fourth quarter. So I'm making an assumption here, okay? It's not going to be perfect. I'm using the number of shares at the end of last year with today's price to estimate the current value. Now, we don't know exactly what the shares are in each of these today. But I figure this is a better estimate than using prices from December 31st. So we've got current value here. Like I said, the allocation. So let's get into this a little bit. First, I want to note here, the top 10 positions make up 41% of everything that was revealed on his 13F filing, okay? So that's fairly concentrated. Top 10 holdings, 41%. Remember, there were over 500 positions in that 13F filing. So the top 10 make up 41%. That's a very sizable chunk. Second thing I want to note, 6 of these 10 are ETFs, okay? They're not individual stocks. They're not individual businesses. They're exchange-traded funds, okay? So Ray Dalio is very big into ETFs. He really likes diversification, okay? Sort of the opposite of Warren Buffett in Warren Buffett's early days. And I don't actually know what Dalio was doing in his early days. Maybe he was very concentrated as well. Clearly, Berkshire Hathaway has become more and more diversified over time. I think part of that is there's just so many assets. And in order to put those assets to work, you've got to find more and more ideas to be able to do that as the fund gets larger. So let's look at the ETFs first. Actually, first I want to look at the percent change. So this first one, okay, this is the largest ETF in the world. It's the S&P 500 Index ETF, the Spider ETF, down 7%. So Ray Dalio sold off 7% of SPY. Okay, that's the ticker for this ETF. Sold off 7% of SPY in the fourth quarter of 2020. Added 4% to this emerging market ETF. All right, we're going to take a little deeper look at these in a moment. Added 4% to this emerging market ETF. Gold, his biggest gold position in Spider Gold shares, all right, ticker GLD, sold off 45% of that position. That is a massive sell-off for the third largest position, okay? Fourth one is an individual business, Walmart, which I found very interesting. And I'll just say right now why I think that's interesting. If we look at, so what is it about Walmart, right? Walmart, it jumps out at me because I think of it as a very defensive play, right? If the stock market tanks, Walmart is going to fare much better than most U.S. equities, okay? Because when the stock market tanks, people have less disposable income, right? They have less money to spend. They tend to shop at places like Walmart or Dollar General. These stores where they can get their basic needs met for cheaper, right? So Walmart does well in a market crash. And I actually looked up what happened to Walmart in 2007 to 2009 during the global financial crisis. So from peak to trough, SPY, the S&P 500 index, went down 56%. Okay, it was like October 2007 to March 2009. The market was down 56%. Walmart was actually up 8%. Okay, so the fact that Dalio has such a big position in Walmart and more than doubled his position in Walmart in quarter four tells me there might be some kind of anticipation, right, of some interesting times ahead for the U.S. stock market. So I thought that was kind of an interesting nugget there. The next position, Alibaba, sort of the Amazon of China, 5th largest position in Bridgewater Associates, increased by 20% in the fourth quarter. Now I'm kicking myself a little bit. I made a couple videos about Alibaba. I was thinking about buying down at around 120 something. Because I had it on my wish list. I had a target buy price somewhere around 120, and it hit that, and I decided, with everything happening with Jack Ma, with the Ant IPO that was pulled, I just didn't feel quite right about Baba, and clearly that didn't really impact Ray Dalio. He went ahead and added to his Baba position in the fourth quarter. So there you have it. Next one, Iemg. Okay, this is another emerging market ETF. Increased by 70%. The largest increase for an ETF owned by Bridgewater Associates. So that is significant. Procter Gamble, the third largest individual stock owned by Bridgewater, increased by 120%, more than doubled, just like Walmart, okay? And I think this may be another defensive play. I actually looked what happened to Procter & Gamble in the last big crash in the global financial crisis. It dropped 35%, which was less than the 56% of the market. But I was still surprised it dropped so much. So I don't know, maybe there's something different about Procter & Gamble. It's not just a purely kind of betting on a downturn kind of play there. The next ETF, IVV, this is another S&P 500 index fund. Maybe just a way to diversify a little bit with not having all of Dalio's eggs in one basket when it comes to the S&P 500, right? You've got the Spider and you got the iShares, two different S&P 500 index funds. The next one is iShares Gold Trust. So this is another gold ETF, reduced by 2% in the fourth quarter. So not much change there. And the last one is a Chinese company, the second individual company from China on the list behind Alibaba, Pinduoduo. And one thing notable about Pinduoduo, I actually saw this on Li Lu's 13F for the first time. So Li Lu is another fantastic investor that I follow. And Li Lu had entered a position in Pinduoduo also in the fourth quarter. So Dalio increasing his stake in this company by 30%. So let's take a quick look at some of these ETFs, okay? The first one we're not going to look too much at here because basically everyone in the US is familiar with this one. It's kind of everybody's go-to S&P 500 index fund. There's a 1.5% dividend. So we're not going to go really into that. That's, very, very common. Let's take a look at the second one, the Vanguard Emerging Markets ETF, okay, VWO. So, expense ratio, 10 basis points. That's pretty good for an emerging market index fund. You can see here, invest in stocks of companies located in emerging markets around the world: China, Brazil, Taiwan, South Africa. Scroll down a little bit and we can see the 10 largest holdings as of January 31st, 2021. Taiwan Semiconductor Manufacturing, TSM, obviously a company in Taiwan. You got Tencent, Alibaba, Meituan, Ping An Insurance of China, JD, China Construction Bank, NEO. So lots of Chinese companies in there. I'm not exactly sure how it breaks down in terms of, fund allocation by country. This is kind of a lame chart here. 98% emerging markets, 0.3% Europe, 1.7% other. I wish they would break out the emerging markets. But you can see number of stocks, 5,048. So, and then net assets of 10 largest holdings, 27%. So that's a little info on this one. Next one we're going to look at these Spider Gold shares. Okay, very big position in Bridgewater Associates. So gold ETF designed to track the price of gold. Great, that's really what we want it to do. So this fund started in 2004. Initially, the price of a share was intended to be 1/10 of an ounce of gold, okay? And there's this estimated expense, sort of an expense ratio for the fund at 40 basis points or 0.4%. Now, what's interesting, what's happened over time in this fund, you can see gold last sale, GLD, that's a share in this fund, this ETF. $159. Okay, and you can see the gold spot price, 1693. So what happens when we divide those two? It's not 1/10 like it was when the fund started in 2004. It is 1693, about 9.4%. Okay, so what has happened over time is a share becomes less and less than 1/10 of an ounce of gold. You know, it's been 17 years since the fund was started. So to go from kind of 10%, the price of gold, down to 9.4%, you know, it's you know, I don't know how big of a deal that is. I haven't run the numbers on it. But, you know, 40 basis points is fairly significant. Now, this ETF does store physical gold for each share that you know is available to be purchased. So it is backed by physical gold. Obviously, if something hits the fan, right, that gold is not in your custody. So, you know, there's risks there, but there are also risks in taking physical custody of gold, right? You've got to keep it safe, you know. So Ray Dalio has decided with Bridgewater that, you know, this option for gold makes the most sense. So, you know, that says something. So next one, we talked about Walmart, Alibaba, Amazon of China. Let's look at this iShares Emerging Market ETF, Iemg. So here it is, expense ratio 11 basis points. Okay, so that's, you know, in line with that other emerging market index fund. Yeah, thank you for that pop-up. Okay, key facts. Inception date 2012, so, you know, fairly recent ETF. What else do we want to see here? PE ratio 18. Okay, so that's, you know, that's fairly compelling, especially when you compare it to like the S&P 500 index, which we'll get into in a moment, but I think it's like 38, right? Very different PE ratio for these emerging markets. Part of the reason why Jeremy Grantham and other great value investors are, you know, putting a lot more attention on these emerging markets than they are looking for value in the US at the moment. Number of holdings, just over 2,500 different companies in here. We talked about the fees. So here we go. We got the top 10 holdings. Taiwan Semiconductor, again, Tencent, Alibaba. So Samsung. This emerging market ETF includes companies from South Korea. Okay, the last one does not. South Korea isn't considered an emerging market by that other fund. But so we do have exposure to South Korea in this one. And you can see here the weights pretty heavily weighted here on, I mean, just the top 4 holdings, right? I mean, you see almost 6%, 5%, near 4%, very heavy in the top 4 holdings. And again, a lot of exposure to China. And this is what I wanted to see with the other one. We can see the exposure breakdowns. So China, nearly 37% of the fund. Taiwan, 14%. South Korea, nearly 14%. India, 10%. And then you go down the list there. So there's that. So I put a little thing together in the next tab just to kind of get a snapshot of what the fees are for these different ETFs and the price to earnings ratios for these ETFs. Now, these aren't always consistent. So I mentioned, I think I was talking about this emerging market ETF. It was something like 18 price to earnings. What was it? Let's go back. So if we scroll up, price to earnings 18.4, okay? But when I use something like ETF.com and I look this one up, it shows a price to earnings of 27, okay? So, you know, before buying one of these, I'd want to understand a little bit better how are these ratios being measured, and make sure I've got the right figure there, if you care about that. Maybe you don't. But probably the most important things to me when looking at ETFs are the fees. We want to have them as low as possible. You know, and then if there's a big enough difference between the S&P 500 kind of price to earnings ratio, weighted price to earnings ratio, versus emerging market ETFs, it starts to get more and more compelling for me anyway, to park money in emerging markets. You know, because I mean, at the end of the day, what puts money in the pockets of investors is earnings. You know, what are businesses earning? I mean, we're partial owners of these businesses when we own shares in the companies, when we own stock. So, you know, to me, price to earnings is an important metric, particularly when you're looking at a diversified basket of companies. It's not great when you're looking at individual businesses. I think it's a little bit too blunt of a tool. Because if you're looking at Amazon and you're comparing it to, you know, something like Intel, Amazon probably deserves to have a much higher price to earnings ratio than Intel. So you've got to understand the business. But when you're looking at a big basket of companies, I think there's value to looking at the price to earnings ratio of an entire ETF like that. So, you know, if I had to go ahead and pick some ETFs, I don't invest in ETFs personally. I invest in individual stocks. But I'm really liking this iShares Core S&P 500 ETF at a 3 basis points you know, expense ratio. That is very impressive. I think VOO is basically the same thing. It has that same 3 basis points for the fees. In terms of emerging markets, you know, this one, you know, slightly higher fees, 1 basis point higher, but it gets me exposure to South Korea. And, you know, Monish Pabrai has been very active in South Korea. You know, I think there's a number. I've seen Michael Burry buying things recently in South Korea. So I would want exposure to that in an emerging market ETF. So, you know, if I had to pick, I would go with, you know, VOO or IVV in the US. I would go with Iemg as an emerging market ETF. And, you know, I'd probably go with this iShares Gold Trust since it has a lower, you know, expense ratio. So just my 2 thoughts on the ETFs here. And, you know, that's it, guys. It's just kind of a whirlwind tour of what's been happening in Ray Dalio's Bridgewater Associates in the 4th quarter. Let me know, you know, what you guys think of this. You know, are you buying any of these things? How is what Ray Dalio doing impacting your decisions as an investor in the current market environment? Always love hearing from you guys. So let me know your thoughts in the comments. And with that, I will leave you all until the next video. Take care.